Hello, everyone, and welcome to our gap trading series, Unleash Your Trading Instinct. Today, we're going to be talking about Apple. Finally, Apple has provided us a gap trading opportunity. We've been gap trading NVIDIA this whole time. Apple has been not providing any opportunities for gap trading, but today we have a lot to talk about because there was a gap a couple days ago, and now we have something to trade against. Now we have our strategy. We have our orders in, and we executed. So let's go over that. But before we do, let's go over our guidelines. If you are going to gap trade, you want to look at big institutions, hedge fund you want to look at stocks that institution and hedge funds participate in and that are buying, because they are also looking at these areas and they're also buying. So you're going to get volatility. You're going to get price movement, and that's where you make money when the price moves. The deal is at these gap areas, so that empty space between the previous close and the open, and you're going to see an example of that in the next slide here in the pattern. So that's a secondary option if there's no gaps, and that's what we're doing with NVIDIA right now. We're taking a look at patterns because there's no gaps right now. So it's not as strong, and I don't like to do that as much, but it's there to see if we can make some profits off of something. And risk management. So we don't want to risk more than 1%, 1.5% around that area. That's what we look at. We don't use stop losses. We look to see if the price will close on a particular timeline, and we go manually into our account and we close it like that, because there are stop hunters. They'll go and get you. So if you could practice that discipline, it'll be to your advantage. Now let's take a look at the chart. So let's transition here. Here we go. We have Apple on the docket. And what an exciting day. We opened higher. There is another gap that formed here. So we can maybe put like a little line here. This is the opening price-ish. Okay. And it was a strong open because it wasn't a gap and crap. We just didn't sell off right off the bat. It held its price, and then I say, if you hear me often in these videos, 5-minute, 15-minute candle closes. So here you have a 15-minute chart. Every candle represents 15 minutes, and we're closing, over and over and over again. And this is what I'm talking about, right? Here, here, here. And that is a signal that we're going in that direction, that for today, that bearish, correction is not happening because we're filling the gap. And 80% of the time it does fill the gap, and that's why we're confident in buying at that price. So as soon as I saw this 15-minute candle close above 144, which entered in the gap area, which is this empty space here, I put on my position. So I think I got in at 144, and I held it till 145. And so again, this is going to go in my lessons learned. I'm going to talk about that on my Patreon, and this will help myself and hopefully help you improve your trading to milk the market, because it actually all the way went to 147, so that's an extra $2 there. My actual target was about 145.65, so I think it was this gap here. 145.64 is what I had it. I wanted to exit out of my position, but again, I need to sell half. I did it on the short side. I actually still have some short. That's for the short selling video, but that's for another. That's for that video. But we did a gap trade today. It was successful. We got up $1 out of it, right? So if you would have bought 100 shares, that's $100. If you would have bought options, if you want to buy options, you can do that as well. It's a little bit more leveraged, and that is, or if you would have bought 200 shares, that's $200. That's a day's pay for some people. So, a quick trade like that, it took literally an hour. So $100 an hour is not bad. Yes, for this particular video, that's what I wanted to discuss on this chart. And where did it go to? It filled the gap. Let's take a look. Let's take a look at the 2-hour chart, because there actually are other things I want to discuss. So breakdown candles, highs are very important areas. And what we have here, notice this. We have this looks like the beginning of a pivot, right? So we have this strong move upwards. We have this doji kind of candle, and then now we have it'll mirror it, right? So we can have another test and come back down here. So, we did some things at the end of the day that I'm going to share with you in my short selling video, but I'm going to leave it for that one. I really want to focus just on the gap trade. So let's take a look at our spreadsheet, because we did enter a trade. So here we go. So let's pop this up here. So we got in at 144, sold on 145, with 60 shares, and that was one day trade that you can do. And how much? And I'm using this as an example. How much is that for? So whoops. So let's put this in a calculator. So 60 times 144. So that's $8,600. And if we do a quick calculation here, so divided by 8,640. So that's a 0.7% gain in 1 hour, which is good. Now you can, you could have purchased a lot more shares. That's totally up to you. But that's the day trade, and that's how it works. So we do this day in, day out on multiple different charts. So I'm just showing you, we're just focusing solely on two charts just to keep it simple and basic for now. As you get better and better at this, and like I have here on my Patreon gap trades tab here, we have multiple charts that we're following. So we're doing many trades throughout the day. Sometimes there's nothing, right? That's okay. But we always try to find an opportunity on a daily basis. That's all I wanted to cover today. Thank you for joining. Thank you for listening. Have a good night. See you tomorrow.